And in our top business story, the Abu Dhabi Securities Exchange has signed an agreement paving the way for bonds and other debt instruments to be listed and traded through the bourse, according to a statement released on Sunday. The introduction of debt listing and trading has long been anticipated in the Emirate as a way to expand the exchange's activities and make it easier for local companies to sell debt instruments. Developing a domestic debt market was a national priority, the UAE Central Bank governor said last November, while the head of the Emirates Department of Finance said the local government would dual-list government bonds in Abu Dhabi and London in the future. Under the agreement signed by ADX and National Bank of Abu Dhabi, bonds can be listed and then traded through the exchange by local and international investors, with NBAD using its account with Euroclear, which is one of the main international clearing houses for trades in public debt instruments, to process the transactions. Establishing a listing and trading platform for bonds brings the ADX into line with Dubai, which conducts businesses through the Nasdaq Dubai exchange, which currently has conventional bonds and sukuk worth more than $23 billion. Dubai retained its status as the most transparent regional property market for global investors, but the biggest improvement has been for Qatar, according to the Global Real Estate Transparency Index for 2014, released by the consultancy JLL. Dubai was ranked 49th in the JLL findings with a composite score of 3.11, while Abu Dhabi was 53rd with 3.20. These scores placed in the list of countries are rated as being semi-transparent, while the UK, the US and Australia were the top 3 ranked countries with high transparency. The composite score is made up of 5 sub-indices including performance measurement, market fundamentals, governance of listed vehicles, regulatory and legal, and the transaction process. The transparency parameter determines how an investor assesses the ease of entry into and exit from a particular market. Last year, Dubai upgraded the status of the property rental dispute redress regime under the Dubai Land Department. According to market observers quoted in local reports, more than anything else, this has created a more even playing field for investors and tenants alike, and with further improvements slated on the regulatory side, Dubai is likely to further consolidate its regional leadership over the next 2 years. A new survey by Ernst & Young has revealed that Dubai leads the Mena hospitality market as the Emirate maintains its supremacy in terms of occupancy level, room rate and revenue during the first 4 months of the year. During the January to April period, Dubai City Hotel average occupancy level reached 90% and the average daily rate jumped to $241 against last year's figures, resulting in an increase in revenue per available room of 6.8%. Cairo witnessed the lowest occupancy level of 27%, with Sharm el-Sheikh, a popular tourist destination in Egypt, recording the lowest average daily rate, or ADR, of $47 in the region during the first 4 months of 2014. Overall, the UAE's hospitality market also saw healthy growth in April, with Dubai's overall average occupancy levels remaining stable at approximately 85%, even given the notable increase in room supply over last year. These positive occupancy levels are coupled by an increase in ADR to $327 in April, resulting in an increase in RevPAR of 5.6% during the same period. April is one of the busiest months of the year for Dubai, as the Emirate hosts a range of events that help boost visitor numbers. Abu Dhabi's Al Hilal Bank plans to raise $500 million from a capital-boosting Islamic bond issue, according to documents from the lead arrangers of the issue. The transaction, which has a perpetual tenor but can be bought back by the lender after the 5th year, is earmarked to price in the area of 6%. Order books for the trade are currently worth around $1 billion, and the sukuk is designed to boost the bank's Tier 1 or core capital. The unlisted Islamic lender, owned by the Abu Dhabi Investment Council, has chosen itself, as well as Citigroup, Emirates NBD, HSBC, National Bank of Abu Dhabi and Standard Chartered to arrange the deal. No time frame for when the issue would complete was given in the updates.